Welcome to another episode of How Real Estate Changed My Life. And if you've listened to any episodes in the past, I interview pretty much anybody that can honestly say real estate has changed their life. And it varies from obviously property management, short-term rental, long-term rental, flippers, land investors, just a little of everybody. And this week I have an exciting pair that I think are making major changes in the property management industry. I've got Eva and Matt here from propertymanagement.com. And I think they have a really good story to tell. And I think there's going to be a lot of value that they'll be able to translate through our podcast episode today. So I want to thank you all both for taking time out of your busy days, because y'all are crazy busy with your projects. But if you would just tell us kind of what y'all are doing. And then I really want to take this episode and just listen to what y'all saw in property management world and what you're doing about it to protect the people who are out there that own rental houses. So let's hear what you got.
My name is Eva. I'm the co-founder of propertymanagement.com along with Matt. So I'll maybe start with a little bit of backstory. Matt and I met through a project in real estate. We were developing an application for property maintenance, and we had this very intuitive vibe where we really understood each other. We really understood what we wanted to build, and it ultimately became a bigger idea about how can we redefine the property management industry? What type of products can we build to support not only property managers, but also how can we empower property owners, investors to actually find the right property managers for them? And so we started working on an idea to create a system, the first system in the market that objectively understands and identifies performance of property managers across the US. And this is how we came up with propertymanagement.com. And so my background is not necessarily in real estate. I come from tech, and this is where Matt and I really play well together. So Matt is a fantastic creative mind with a lot of knowledge in real estate, both from the owner and the property manager perspective. And I come from a process of data, organization, product development. And we're building this, in my opinion, fantastic product that is going to serve a lot of different profiles across the property management industry. And so I don't want to go too deep into it before we have a broader conversation, but I would love for Matt to kind of jump in and talk a little bit more about him and the vision for propertymanagement.com.
Yeah, and Ava's extremely humble. She, the experience that we had on our first project together, she provided the most seamless, perfect customer experience that I've ever experienced. And I was basically just how do I work with this person more formally? And so that's how we met. So what we're trying to create, the Carfax of property management. That's always the analogy we come back to. We'll maybe dig into that a little bit more in a moment. Me personally, so I started my career in first for a period of time, for about a year and a half. I was at a venture-backed tech company right out of school. I was in a sales role. I started investing in real estate on the side, listened to a lot of Bigger Pockets episodes. That's how I learned real estate. My now wife went to the University of Nebraska. And so I drove 650 miles there and back listening to Bigger Pockets podcast episodes. And it took about 3 months of that before I bought my first rental property. At my tech job, my day job, they thought I was like a realtor on the side. They didn't, I didn't talk a whole lot about it.
Kansas.
They're like, you're buying what? What's a BRRRR strategy? And so anyway, one project led to another. I ended up having about 30 rental properties with partners. I didn't have any money. Initially, I didn't come from a lot of money, but I was able to partner with people that did and believed in me. And I kind of stumbled into becoming a property manager. I had 30 properties I was managing. So I guess I was a property manager. It took me till about 100 properties to realize that I kind of like this recurring revenue model.
Sure.
And so I sort of drank the crazy property manager Kool-Aid and decided to build Live Indy, a property management business in Indianapolis. And so, that's been my whole career has been real estate investing, property management, and doubling down here now with Ava on propertymanagement.com.
Sure. So it sounds a little similar to mine. I started buying rental properties and then managing my own and then helping other people manage their properties. And I do like that recurring model. The thing is it's funny. Right now my phone's blowing up or messages from agents are like, I want to be a property manager now because it's really tough as an agent. but they think being a property manager is easier than it is. They don't take it as serious as they should. And I think that's where propertymanagement.com comes in, is because it kind of helps provide the, I don't know, the score, I guess you would say. What y'all are doing is very important, because I've gone to lots of conferences, taken lots of classes. Everybody talks about how to make money in property management and how to get clients, but nobody talks about how to really be good at what you do. And I think that's kind of interesting.
Well, yeah, I appreciate that, Cal. So I think like the kind of peeling it back a little bit, like the inherent problem that I think we're solving is that, investors, they have to rely on Google reviews, Yelp reviews, Better Business Bureau, accreditations, and then, sales pitches from property managers to determine, hey, is this property manager the best, steward of my asset? And what they end up doing is just gambling with their ROI.
Yeah.
Because if you look at a lot of these websites, they'll say, 97%, rent collection. They'll say average, 14 days on market. You'll do the sales pitch. They'll echo the same thing. But then when you look under the hood, you realize that that's actually not what's happening. And so what their marketing pitch is and what the reality is often different. And so what we do to solve that problem is we just open up the hood and we say, hey, no, this is actually what these stats are. This is what you can expect, so that investor can truly find the right property manager for them and stop gambling keep gambling with the important ROI cash flow that we all care about. Eva, would you add anything to kind of the core problem solution there? It's what we always come back to. It's that Carfax analogy.
Yeah, no, I fully agree. So one thing that I always like to say is that data and information is only helpful when it's viewed in the right context. And just having a single piece of information like a Google review or a price point doesn't really give you a holistic story behind what you're actually getting from a service, from a brand, from a property manager. And so the way that I see TrueMatch is not only an objective measurement of that, but we create a story. We take all of these different metrics across all of these different categories, and we tell you a story. Is this the right property manager for you? Instead of just looking at individual data points that owners have access to.
And as a property manager, I can give a little bit more, and I can put a little bit more color on this, and that one of the associations for property management firms out there, to be accredited or certified or their badges or whatever, however you want to call it, it's not how good are you at being a property manager. It's, did you pay your dues, and did you manage X number of doors for a couple of years, and did you volunteer these many number of hours in our association? And there might be a class or two, but none of that had anything to do with quality at all. And then that's what people are going off of as whether or not they're a good property manager. And everybody says, oh, well, make sure you get a property manager with this certification. Like I don't even have the certification, because I signed up for it and I saw how much of a waste it was. And they were basically trying to get volunteer hours out of members. And then they were given a badge as a certification as a result. And I'm like, this has absolutely nothing to do with whether or not I'm good at my job at all.
Well, and then there's like, I'm gonna knock them. I hate to. I don't like the Better Business Bureau.
Oh yeah, it's a racket.
People legitimately think that it's like a government organization, that they're like stewards of the everyday consumer, and that it's like this government backed. It's not government backed. It's a private company that you're basically paying to say you're. And I've actually learned that you can pretty much pay them to get the rating higher.
Yeah. That's
crazy. And so then getting off of knocking Better Business Bureau, it's like you take it a step further, because some people might be like, well, wait a second. That's what Google reviews are for, right? It's like, oh, Google review, especially Kyle, how many reviews do you have?
Oh, I think it's about 680.
Yeah, a lot. Yeah. And a great amount of, over 500 is top notch. And I think if I remember right, Ava would probably know this. I think your Google rating is like a 4.4.
A 4.4. Yep. So
that's above average. That's good from all the property management companies you'd see. But when we look under the hood, you're elite. You're in the top percentile so far to date, the best score that we've had. So there's a great example of, Google, even at that scale of volume of reviews, not being directly reflective of this, like the level of quality that you are as a property manager.
Yeah, I appreciate y'all looking under the hood, because like that whole Google thing, that's huge. People give so much validation to that, but people only like property managers when everything's great. But when somebody's declined on an application, they go out and give them a 1-star review. And so you see a lot of property managers that may be amazing in all reality, but they may have a two stars because they don't give a lot of effort to trying to go get the 5s, because they only collect the ones that the deadbeat tenants that decline, which means they're good at their job, but now they got a bad review. And then there's the ones that have the 4.9s, but they really just buy and sell houses. They do property management as an afterthought. So which one's better? You don't know. You can't tell off of a Google review. So tell us a little bit more about your rating program, because I was very happy to see that y'all are coming in and doing this. And in all transparency, I opened up my hood. I gave you my logins to my accounts and let you go in and dig deep, pull my blood work and everything, and scrutinize me. Because, one thing you'd be able to bring things back to me is like, hey, Kyle, this is where y'all need to improve. And there's obviously always somewhere to improve. And then, at the same time, it's a little scary because I'm like, I don't know. I don't even know how I compare to everybody else, because I just do what I do as best as I can. So tell us what all goes into this scoring mechanism you'll have.
Yeah, great question. I'll say a lot. So to create a very holistic story, we need to understand and normalize the experience. So Kyle, you mentioned Google reviews. Matt said that it might not necessarily be reflective of performance. So how do we normalize that? We need to look at the broader picture. So while, let's say that you are not a fantastic property manager, but you have high reviews on Google. If your performance is not reflective of that, we're going to notice, because we have a lot of different categories that we're looking into. We're looking into performance. We're looking into cost. We're looking into trust, credibility. And these categories will normalize. So I'll give a very specific example of reviews. Say that you have very high reviews, but your leasing trends are going down. You have lower renewal rates. Your rents are going down instead of staying steady. Your leasing, let's say, turnover is longer. Then this is telling me something is wrong. These reviews aren't actually reflecting your performance. So either there's a data quality issue that you need to address. So this is something that signals operational maturity, or the reviews that you're getting are not actually legitimate, right? So looking into all of these different categories, leasing trends, your price points, revenue that you drive for property owners, things like reviews, of course, come into play, but we look at it from a story, from a high level, and understand how to connect all of these different metrics to create a story around your performance. And the way that I think about these different categories is we have performance and cost that allow us to understand ROI that the owner is getting from the property manager, right? So what are the rents like? What are the leasing trends like? And then what is the price point that actually the property owner has to pay, right? So having that difference between revenue that they're getting versus cost helps us understand ROI. And then trust and credibility help us understand how much confidence can I actually have in my property manager to deliver on the value that they promised. And so looking into both of these aspects, the higher the score, the more confident I can be that the value that the property manager is driving for me is going to be consistent and it is on point with what they promised.
Yeah, and I'm a big Indiana Pacers fan. So you think about, I'm going to use a really obscure basketball analogy here. If you've got a property, or let's say you've got a basketball team like the Pacers, they score 130 points in the, call it the Eastern Conference Finals, game 1 or something. That's a small sample size. That's a really high score. They're putting up a lot of points. So their offense must be really good. Their performance must be great. That's a small segment, right? So you look at the next game, they put up 90 points. That's another data point. So now you're maybe not as hot on the performance. And so when you think about a property manager, oftentimes the performance and the cost are kind of battling each other. There might be a lot of hesitation. You might go, you know what? Our costs are high because we offer a great quality service. That may be true. That may mean you keep rents high, you have strong renewal rates, you keep days without revenue low. Like you might perform really well, but also you might have, let's say, 105% rent achieved relative to market rent, but your days on market, your days without revenue might be off the chart because you're asking too much rent. And so the two really work hand in hand to deliver, like Eva said, a full story, a full picture. And then nerdy data like standardization, normalization, like it's an objective measure, right? When you compare one property manager to another, it's an objective measure that can't be influenced. You pull the data in, the data tells a story, which is the TrueMatch score. I didn't like my basketball analogy. I'll work on it.
No, it's good. No, it's good. The thing is there's a lot of variables that go into this. So what's some of the things that you've seen that are commonalities on good firms and commonalities on firms that didn't score as well or do as well as they look like they would have, like unexpectedly? Talking about the good scores, but on the bad scores, like their image looks great, but under the hood wasn't the reality. Like how do people see and understand how that works?
I'll let Eva dig into that one, but just at a high level, from kind of putting my property manager hat on, it's like if you're maybe a startup property manager, maybe you've only been around a couple of years, and maybe you started out doing it on the side or something. I think the smaller property managers look at the big dogs that have, thousands of doors and thousands of reviews, whether they're private equity backed or been around for 30 years. They kind of feel like they're at a disadvantage. Our colleague Dylan always uses this like travel baseball analogy where he's like, growing up, the kids that play travel baseball aren't necessarily the best, but they're the ones that like have the most money because they could, parents can afford to pay travel baseball.
Right.
And so it's kind of like this, the big, the David versus the Goliath kind of mindset. The reality is that the smaller property managers, in terms of credibility, they are at a bit of a disadvantage because they don't have as long of a history. Mm-hmm. The more data, the more confidence that we could have in the score that it's a good, that story's been told longer. And so we can feel a bit more confident in it. Eva, what did you see? I think that's the one that stood out to me the most. I was just a bit surprised because it did kind of signal like, hey, years in business, like how long you've been doing this, it does matter.
Yeah, I fully agree. So, and that speaks to operational maturity. It speaks to experience. And one really high correlation that I've seen is the data quality. Like the highest scoring property managers will have fantastic data, which makes it like a pleasure to actually go through, understand, extract key insights from it. Those that score lower will typically have more of a data quality issue. And so it's just that operational maturity, experience, understanding how we want to track things, because ultimately fantastic property managers, lead property managers want to have visibility into what they're doing to help them drive further success. What is standing out? What is working well? How can I improve? What are some of the KPIs that I'm looking at? What are some of the low-hanging fruits? And so I feel as you become more mature, visibility into your operations becomes significantly more important. And the data quality reflects that. And then the second thing that I've noticed, which is more of a soft part of the business, is transparency. So Kyle, your company is super transparent about pricing. You have tenant agreements, you have PMAs on your website, you have a lot of different resources to basically help the owner understand whether or not you're a good fit for them. The highest scoring property managers are super transparent about their process. And the way that I'm interpreting this is, you do really well. You know that you're a fantastic value for the owner, which means that you're not really scared to share that information with them. Right. And so you're very transparent about it up front, and you're very confident. Like I recall when your team walked into that conversation that we had about verification, your team was very calm, very confident, because you knew you do like a fantastic job, right? People that are not 100% sure if they're actually doing a good job will come into the conversation nervous. Mm. It's like, I know that I have low hanging fruits. Well, you discover it.
And Eva, maybe even defensive. Like,
yeah.
Which is okay. Like it's a natural human feeling to be like, hey, they're about to look under the hood. I'm a little bit worried because I know I haven't changed the oil in a while. Like my wife gives me a hard time. I don't go to the dentist as often as I should. Like it's okay to be like worried about it.
And I think a lot of property managers, they need to know that it is a hard business. Like this is not like I've got friends that own other businesses and I'm almost jealous of them because they have like one product or they have one service. And in property management, I've got tenant challenges, I have owner challenges, I have vendor challenges, I've got application challenges. So I'm getting hit from every single direction. And property managers need to understand that, like, you're not alone. Like, we're all going through that challenging moment. So they may think that they're doing a horrible job when they're doing as best as they can in a very unique business model that I don't think there's very many businesses like ours out there. One of the other things that I thought might be, and this is something you're going to find out later on, maybe, are there certain backgrounds of ownership that lend themselves to be more successful or less successful in the industry? I noticed when the real estate market tanked in 09, 10, there was a lot of people that, like, I was in at the time, I still had a full-time job, and I was in the financial service industry, and a lot of people got laid off. And then at that point in time, I saw property management changed. That was when it became more of a professional industry, I guess you would say. Like, I saw a lot more people that were like meaningfully jumping into property management and running it as a legitimate company as opposed to a spare bedroom business. And I saw a lot of these people that are now very successful out there in the industry that started in that 09, 10, 11 range. And they came from corporate world where they had corporate structures and processes and procedures. And I always wondered if that was a common interest. And, being a real estate investment owner, I think, helps also, because you're more mindful of money spend than someone that doesn't own investment properties.
Yeah, it's an interesting perspective. I mean, the more and more verified accounts that we'll have, the data will start to tell stories. And Ava and I are both super excited to start to share those stories, whether that be, market trends. I mean, we'll have the data, it's data is oil, right? Like, we'll be able to use this information to share and provide value for, the community of property managers that are part of it. I think something interesting, like you think about the size of property management companies in terms of door count. If you get up to, 500 doors, 800 doors, 1,000 plus doors, like those different levels or checkpoints. I mean, us as property managers, we know that means something because we know how difficult it is to get through those checkpoints. And so, I think size definitely does bring some credibility, but I think every few weeks I hear a story about, somebody that was at 1,000 doors and now they're at 500 and they're redoing their operations and updating some things so they can try to build again.
You're right. There is some, you can't be horrible and get that large, but there are so many hurdles to hit. And if you don't have your business fine-tuned to adjust as time goes along, because like 0 to 100, yeah, you can do that. And then 100 to 200 or 300, there's a little bit more structure that needs to be placed in. You're starting about looking at employees and how do you handle them, and then how do you scale. And then one of our numbers that we just hovered at for a long time was 800. Like, it was 800 houses. I've always staffed my company software wise and employee wise to where we could scale. Like, I went with the departmentalized business model because I figured we could do a lot more with people that are experts in their specific silo. And I think that's done me well as a company. But and then the 1,000, there's another hurdle, and then everything's different. My business looks very different than it did when I had 300 doors or 200 doors. I mean, there's some commonalities, but it's very different. So because somebody's at 200 doesn't mean they're bad. Like, there's some rock star 200 house management companies out there that are significantly better than a lot of $800, $900,000 door places.
Well, and if you're the investor, like, so, if you just have a rental property or a portfolio of rental properties and you rely on a team, and one of those team members might be a property manager, a lot of times you get gravitated towards the like startup, the maybe the younger guy or gal that's like, manages 20, 30 doors. So you feel like the premium client because you can text them. And I've seen that ship, that ship rise and fall many times, where it's like you're a high priority until they get burnt out and decide to just quit. Right. So I think
they're being treated as an employee, not a manager.
Yeah. And then, they don't, they go do the maintenance in a lot of cases, or they do the leasing. So they don't have to build like real scalable systems. And so, on the flip side of the coin, you can be a property management company with 1,500 doors. I've talked to one in Phoenix that had like over 2,000, and they were adding 50 doors a month. So they had marketing figured out. They were losing 50 doors a month. So they were just spinning their wheels, right? So if I'm an investor looking for a property manager, I don't want to go with the 2,000 door company that's losing as many doors as, that's like a ship with water, actively coming in, right? And the data, you can't hide from the data. The data tells the story. So
yeah, as the market cycles through, it's like right now, I feel like we're in an industry, like we're at a moment in time where property managers' business is changing, in that it does remind me of the 09, 10, 11, 12, where we were getting a lot of accidental landlords, people that didn't know, like they didn't want to own a real house, but they have one because they have to move but can't sell this house, or I'm going to buy a house, or I have to move but I can't afford to buy, so this one will be a rental, or what. You get a lot more accidentals. And we haven't had that in the DFW market in a number of years. And we got a lot of clients that, now they're going to take their chips off the table and start selling some properties because they got huge equity. But now taxes and insurance have just been killing their numbers. So it's kind of interesting to see how that all, through time, how that all changes. And you got to have a company that can roll with those punches. Because I've seen companies that do really well in certain environments and then others that don't. So a lot of the companies that compete with, they're really set on investors. And I've done really well with those. But if that's all you're doing, your market's really gotten small in the last 6 months.
Right.
And they're just going to, tighten up for a while. But like our marketing plan is completely different this year than it was last year, because we're marketing to that new world that we're in.
Yeah. And I'd love to bring this back to the Carfax analogy. So, they got famous with the show me the Carfax.
Mm-hmm.
And so we're talking about the scoring and how we break it down and why that matters. And you're talking about the ebbs and the flows, the market, 2009 crash and, the interest rates now, like having this score through propertymanagement.com. It's not just a one-time static score. Ava's team is going to be updating the score quarterly. Eventually it'll be monthly, and hopefully, in the near future, it'll be real time via integrations. And so if you're a client, you're an investor, you work with a property manager, man, isn't there a lot of peace of mind in being able to go to propertymanagement.com and see what the updated score is of your manager? You'd be able to start to see that ship start to sink, which is like obviously not what we want. Like we serve our property management clients, they're our clients. We want to help them improve that score, but by focusing and kind of shining light on, just letting the data tell the story, it really allows the investor to protect their ROI, right? And find the best fit for them. And it might even be something as simple as like, maybe you want to start investing again. You haven't bought in 5 years. So you want a property manager that also helps with acquisitions. Did your property manager offer that? Right. So, I think that the score does a lot just in terms of that retention, and credibility for the property manager, but also provides a lot of long-term value for the investor as well.
So do y'all have a plan on how to get the score to be more visible out there, as far as something that somebody would know to look for when they're looking at property managers? Like, are y'all going to be like, where would, like, I'm an accidental landlord. I've got a house. I'm going to have to rent it out. How would they know about propertymanagement.com, and how would they know about scoring one firm versus another? Like, how are they going to find you?
Yeah. I mean, we have we're really fortunate to have the domain. It sets us apart at the beginning, right? Propertymanagement.com. So it's already showing up organic search, and a lot of the major markets relatively high. And so it makes the awareness marketing campaign that, we're actively going to be, pushing forward easier. But it's exactly right. Our objective right now is to get this in front of as many investors' eyeballs as possible, letting them know that you can, pretty much go to your property manager and say, show me the Carfax. Mm-hmm. Hey, get verified on propertymanagement.com. And so once you start having investors going to their property manager and going, hey, sorry, you're not verified on propertymanagement.com. Can you do that? And, that's the same Carfax kind of like, that's what played out in the market. And so that's easier said than done, right? But our goal is to, make as many people as possible aware of that. And I also love that, like, in this conversation, we haven't talked about leads at all, right? Like, the outcome from this for the property manager is going to be more leads and more growth, because we're going to shine the light on the property managers, like, you know, kind of like your company, that are excellent and, you know, actually not excellent. You're in the elite tier.
Yeah.
You're higher than excellent, but putting the light on your company so that, you know, people will be confident that, you know, you're the right fit for them. And so growth is kind of the outcome that'll come from this, from the property manager's side. Eva, do you have any thoughts on the awareness piece of this? Because you're kind of the brain behind the TrueMatch, you know, scoring.
Yeah. So my vision is basically the same. Is like, this becomes the gold standard for investors and homeowners to understand, like, how is the property manager performing, and just, is this the right fit for me? So I kind of see this as, we have like a few ideas to increase visibility also through our partners. We want to create things like badges. We want to create some materials that you can also put on your website and say, like, this is like, I'm an elite partner. And so I see this as a win-win-win. So we get more visibility through you. You get visibility through us. Homeowners, investors discover both parties. And it's like, we're always thinking about everything from the win-win-win perspective. How can we design our partner program to be win-win-win? How can we design our product to be win-win-win? How can we increase visibility to everyone in this process? And so I don't necessarily know what that looks like today, but we are very consciously thinking about, like, how do we promote our partners? How can our partners help us also gain visibility? And how do we make this process work for everyone?
Yeah, I've got ideas. I think you're sitting on so much opportunity out there. If there's like additional training classes that you can put on that, or partner with somebody that's like, hey, this is the best processes for XYZ, or, you know, things of that nature, I think would be great. And then like just providing other vendor connections that might be good. That might be something. Because that's another challenge, is there's we were talking before we started recording, that there are vendors out there that sell you this product and it doesn't do what they say. And so there can be vetted vendors out there also that I think would be beneficial to property managers and individuals that are looking for management, or help in their managing their own properties.
Yeah, it's a good call out. I mean, I think NARPM is a great community. I think it has its pros and its cons, you know, a lot of pros, but I think that's where people go right now to find like the latest and greatest technology. Having been on that scene for, you know, 4 or 5 years now, I've seen that happen, you know, the big pitch and everybody's like, sign me up. And then the next year you hear about how bad it was. And
yeah, there's a lot of cycling through. It's funny. You'll go to these conferences every year, and like one year it'll be, oh, these are the best background check companies. And there'll be like 8 of them. And then the next year it's like, oh, these are the best property maintenance coordinating or vendors. And it's like, you see what the new thing is this year. Every year it's something different. We've got a lot more software, a lot more AI now. A lot of I went one of my events I went to, was like half the vendors are remote team member companies, like or you know, VAs, like assistants. Like half of y'all, like, really, like, let's throw in some other businesses in here to kind of spread the love. But
well, I think this will be a little bit of a tangent maybe, but on topic right now, it's like a lot of the AI companies are using AI today, like snapshot in time, like right now, are really just like AI wrappers. Like they had a clever idea to integrate with, you know, OpenAI, and, you know, it's basically just like a better branded, marketed something you could do on ChatGPT. The problem with those tools is a lot of those tools are really valuable if you aren't aware of that you could just go to ChatGPT and do that. A lot of people aren't confident enough to like build their own tool. So there's use cases there, but because AI is changing so rapidly, those tools become obsolete really quickly. And so you get in that cycle of always just trying to chase the next, like the cool, you know, marketing AI wrapper type product. And if you just kind of keep chasing the carrot there, I don't know that there'll be I don't know that you're ever going to get it.
You're correct on that AI wrapper. I go in to chat and I build out my prompts and everything. I'm nowhere near an expert, but it builds out some pretty good stuff for me, and I can copy paste and build out. And I'm like, I don't know how to use a software, and it'll tell me exactly what to put in, where to put it, and build it out. So I've got landing pages that I've built that I've done them before, but not to the level that AI prompted me to. So I'm like, oh, okay, now I've got my retargeting ads now set up that I didn't have earlier because of my pixels and all that. And I didn't have any of that stuff built in previously. So it's fascinating.
Well, I talked to this happened today. I hope that there's no reason for this person to listen to this podcast, because I'm going to say that
hey, my mom's going to listen. I know she listens. Other than that, I can't guarantee much.
All right. Well, I talked to a guy about branding today. So we're looking to do, go from MVP level, our team doing our branding, right? Like we're a startup company, like a lot of listeners running property management companies experience. And so we're talking to this guy, and he runs a marketing agency and built some really cool brands. Like I looked at the sites. I'm like, this is awesome. And I talked to him about his process. I'm like, all right, what vision do you see for us? Like, what would the cost be? And he's like, well, it'd be, $6,000. You get this, this, and this. And I say, cool, talk to me about your process. And he basically then describes to me what AI tools he uses. I fill forms out telling him what I want, my vision. And then he plugs them into these AI tools that then give an output, and he charges $6,000. I don't think he realized he literally just told me that like 3 tools I could go use and then get the output I would have had from him. So, you're talking about you don't think you're good at ChatGPT. Just the fact that you're using it and you're solving problems and doing things yourself, like I can tell you're probably in the top 5%, just the fact that you're trusting your own instincts and using it.
Yeah. Sometimes I wonder, like, what do people like? I'm always wanting to learn and know. And I mention things to people outside of my circle, and it's like news to them. And I'm like, what is my echo chamber make me think I know less than I do, because I'm in a cycle or silo full of people way smarter than me. But then when I get out of that silo, like they're just people, it's not common knowledge. So it's very interesting. So, that wrapper is the AI wrapper is very valuable to people that are outside of that silo, but the people inside the silo, like you, then
I think the test with those people, you could ask them one question. You could say, can AI write SEO content? And if they're like, no, Google hates it. Google hates AI. Then you're like, okay, their level of understanding of like AI. Because now we kind of know that like, AI writes great content better than most people, and all the marketing agencies are using it now. Like a year ago, it was like hot topic. And so it's like you kind of get the level of distance they are from kind of the reality, but it's tough because it's always changing. AI is a big part of going to be a big part of small business. I mean, who knows what the world will look like for us in 2 or 3 years? Maybe we'll finally figure out this maintenance issue.
That's the thing is I'd be very interested to see on the maintenance, as far as who scores higher or lower, is how do they handle maintenance? Do they have in-house or do they use third party? Because that's always the question. Do you do in-house or do third party? I do primarily in-house, but I do third party, a lot of it too. But there's reasons I'm doing in-house. One is my guys have workman's comp. My guys have peed and cup, so I know they're drug free. They have insurance for liability. Their cell phones always work because they're mine. Their vehicles always work because they're mine. And I have E&O insurance for my office. So there's those things that make me more expensive in that regard than just doing third party, because I'm not just pulling some guy off a Google search to go do maintenance and sending them into a home with somebody. I'm like, I didn't run a background check on that person. And I've been to some of these NARPM events and sat at tables with other property managers. And if they tell you they have property management down there or maintenance, they're lying, because nobody's got it figured out. But I remember one, I sat down, they were fairly sizable, and they're like, well, we got great handymen in our market. And I'm like, well, do you do background checks on them? They're like, no, like they're like, I just go to the handyman company. I'm like, I don't understand why you would do that. And I'm like, if you don't have a background check, and I did this years ago when I was kind of first getting in on my own stuff, is why I do this. But I was like, you're sending this person into somebody's home, and you don't know who they are at all. You just know that they were on Google. They searched on Thumbtack. Thumbtack does a background check on somebody. But no, I was rehabbing one of my own houses. I bought it, and so I think that's another reason I think we're a little bit better is I own houses. I've watched dollars and pennies, and I had a maintenance guy that I found off of, I don't know, Craigslist or something. I used him on my house. It was vacant, and he was really good. He did great work. And I was talking to him, and he's like, "Hey, can I do more work for y'all?" I'm like, "Hey, if you're going to do work on houses that are occupied or houses that aren't mine, then I have to run background check and do all that." And he came pretty clean, but I did a little bit of a background on him, and I wouldn't send him anywhere near school. I wouldn't send him anywhere near women. I wouldn't send him. And I mean, he'd rolled out of prison. And when you roll out of prison, how many jobs are you really able to go get? Well, you can be a handyman on your own because nobody,
nobody has questions.
Yeah, nobody has questions.
Yep.
So I would suspect that there's a high percentage of handymen out there that have horrible, scary background checks. And that's just who gets caught. That's not who doesn't get caught. So this gentleman loved his work. He did good. He's very respectful to me, and I'd put him in a vacant home that I own, but I can't roll them into houses that are occupied. But I was shocked at how many property managers don't run background checks on people. And
yeah, I mean, I think a lot of property managers just focus on shiny objects and oftentimes like the wrong things.
Mm-hmm.
And so I think when we'll obviously have a lot more data on this, and we'll be able to, put some, marketing collateral material out on this in the future. But I think it comes down to speed and cost, because speed matters the most because it strongly correlates to renewal rates.
Mm-hmm.
If you have strong renewal rates, you minimize the window of time where you have the highest cost. If you have renewals, you don't have vacancy. You don't have to go through the turnover cost, the leasing cost. So as an investor, your ROI is protected in the best way if you have, what ends up being fast median speed of repair. If you're fixing things quickly, strong renewal, higher ROI. The other one is cost, but it's kind of like our 4 categories where you have performance and cost feel like they're kind of at conflict.
Mm-hmm.
But the reality is they're just like working together.
Mm-hmm.
The best mix is when you have fair cost, not the lowest, fair cost, and you do it quickly. But quickly ends up being a lot more important than, $250 for a whatever, like a leaky sink or something, and you wish it was $125. But if it took a long time and ends up causing vacancy, that future vacancy and leasing cost will be in the thousands of dollars. So which one would you? So the two have a balance. But yeah, I'm excited. I'm sure Eva's already got some thoughts on the maintenance side of things. It'll tell a pretty compelling story.
Yeah, and one thing that I'm always conscious of is like, how do elite property managers do it? Because ultimately what we want to do is we want to raise awareness of what is the new industry standard. We want elite partners and excellent partners to help us define those industry standards. Because where I see the biggest difference between go-getters and elite partners and those that potentially score lower is they might have a similar knowledge, but they're not working towards getting to that level in the same capacity. And so I think spreading that knowledge and setting new industry standards, or setting standards where there are no standards today, potentially like property maintenance, spreading awareness is not where the difference happens. It's whether or not the property manager will actually go and implement those standards to drive that value for the owner.
Yeah, and it becomes accountability. So let's say you're a property manager and maybe you're using a tool like Property Meld or something. Because I know Property Meld tracks median speed of repair and has some interesting benchmarks and data. So these things, but you're not incentivized to actually follow through with them. In some ways, a lot of property managers have sort of negative incentives. Like, if you make more money doing the turns, like if the property being vacant results in you making more money, even if you're the most high integrity person and company out there, it's human nature. You're the outcome for you personally, financially, is better when those things happen. So with something like propertymanagement.com, we actually have a way to track and hold accountability to be tied to the action. And so now that there's that accountability kind of feedback loop, it creates the win-win-win, because I think good property managers, they want to really feel confident that they're providing a good service. And we'll just happen to have a way to track and make that apparent to the investor. So, it comes back to Eva's win-win-win. when it's just a lot of data, a lot of complexity, but at the end of the day, it's simple. How do we create that win-win-win?
I think you hit you hit a point that you may not have thought was as big as it is. And it was a lot of the property manager companies, because back when I first started buying investment properties and I moved back to Texas, I was in Ohio at the time. When I was in Ohio, I had a couple of properties up there, and I was like, well, this is the most well-known property manager in my town. So I handed my properties to them thinking, hey, they're going to be great. Man, they gouged me for everything. And I remember I had a tenant that had a turn, and I didn't have any money. I was broke basically. I moved states and came back to Texas to start over, like in a different industry, to be closer to my now wife. And so I remember getting this like call from the property manager, who was just a kid, didn't know what she was doing. And I was like, well, how much is this going to be? I mean, they didn't send photos. I mean, digital photos weren't as big back then. And she's like, well, this is going to be a lot. I mean, you send 5,000 just to start. And 5,000 went a long ways back then. And I'm like, just to start? What are you talking about? Like, I managed rentals for other people and me, and 5 was a lot. I mean, you could do a lot with that. And she's like, well, that's just to start. This place is horrible. I'm like, what the heck? So I hopped in my truck because it was like one of those 3-day weekends. So I left work, drove straight up there, got the keys from the property manager, went over to my house, which is not far away, went in, and I'm like, it's not that bad. And so I went to Lowe's and picked up, it was maybe $100 worth of stuff. Like I did a new polyurethane coat on the floor. I cleaned the walls because it was like semi-gloss paint. So I just wiped off. The dog's tail hit some side of the walls, but that was it. So, I mean, you're like $100 and it was back ready to go. Perfect. Nope. And I just had to clean.
Yep.
But I was an out-of-state investor to them, and they were incentivized to make that turn really expensive, when in reality, it wasn't that much. And that was when I decided, no, I was onto something. I'm doing property management. And so I view it as, the way I looked at it is, I was an ATM to them, because they were looking at tenants being poor. I'm not going to get money out of the tenants, but the rich property owners, I'm going to get money out of them. I'm like, well, that's not how it works. I need my investors to be super successful. So I need to make them money. I need to be, like you mentioned earlier, return on investment, ROI. I need to make sure they have a really good ROI on their properties. So I can't look at owners as ATMs. I have to look at tenants as ATM. And so my pricing model has to reflect that. So I don't put we do a 10% override on turns or 10% override on maintenance. Like I'm not as profitable as a result, unfortunately, but on a scale it works. And I have to watch my pennies, nickels, and dimes. But it's very interesting. You can see these property managers, how they set their pricing up. I'll look in my industry and I'll see a property manager that has, let's say, $99 a month property maintenance or management. And then they don't charge for this, they don't charge for that. And I'm like, but then when you inherit clients from them, you find out like, oh, okay, now I see what money. They're like, crap.
I think they call that a loft leader. They're like,
there's a lot of that out.
The magnet, the $99 fee, and then make money every other way we can.
We lose. So when somebody gets their first property manager, like they go get the first property manager, we may not win because we're not the cheapest, but we're by no means expensive. Like we're the best deal. Like you can get coffee from a daily coffee from what we cost, but they'll go to the cheap guy. And then that's when we end up getting them. When they get rid of the cheap guy, they come to us because they're like, no, I need to make sure this is actually done right. And when you're running cheap, you can't afford some of the software tools that, the better guys do. But yeah, you can really see how they price their models out and where they're making their money. And I wish that was more prevalent in the industry, where people knew, oh, don't get the $55 a month guy. The 150 or 180 or 200, that might be the better deal when it boils down out, comes all out to wash.
Maybe Eva and I can help push some of that change forward.
I think you will. Y'all are onto something. I really appreciate what you're doing. I think you got something great. But so I guess we should probably wrap it up because we've got our time. I think Eva, you got an event to go to next. So thank y'all so much for what you're doing in the industry. I think it's incredibly valuable. I want to see y'all take this and really run with it and make this a common knowledge like Carfax. I think people really need to know what they're getting into with property management, because I think it's an industry. There's a lot of great people in it. There's a lot of great firms. There's a lot of people that just don't know what they're doing. And I'm not saying they're bad or evil or anything. They just really don't know how to really run a property management company or what really is involved. I think by what y'all are doing shines a light on that and lets people know what they're signing up for when they sign up with a property manager. So I really appreciate you being on, and I wish you all the best of luck too. So thank you for being on this most recent episode of How Real Estate Changed My Life, because I know it will for everybody that jumps on the real estate bandwagon. So thank you again.
Absolutely. Now, one final thing to say before we hop off. So, well, really two things. One, if you're in the Dallas area and need elite property manager, Kyle is your guy with McCall Property Management. And then if you are somewhere else, you're an investor, you don't have a property, or maybe you already have a property manager, ask that they get verified on propertymanagement.com. You asking them, it'll be just like Carfax. The pressure will kind of force them to have the accountability, and it'll create that win-win-win that Eva talked about earlier. So thank you so much for your time.
Absolutely. And it is scary for a property manager to open up their books. I mean, that's scary. It's kind of like, so I get it. So I can understand the hesitation, but I think when more people do it, it adds more credibility to it. And I think it'll be a good thing for the industry. Absolutely. Thank you.
Yeah. And sorry, one last thing. We don't want to say, just point fingers and say like, you're good, you're bad.
Mm-hmm.
We want to help you understand what are some of the challenges that are potentially contributing to some of the operational challenges that you're facing. So it's not just about the score. It's about seeing under the hood, understanding what is working, what is not working, and helping you drive that success. Whether or not you do it, that's your responsibility, and that's on you completely. But we want to help you get there if this is something you'd like to do.
And to be clear, your score, like let's say we're 95.5. That's awesome. Thank you. But it was broken out in different categories. So there's certain categories that stand out. So it's not like you got the score. It's what sections you scored in, which I thought that's a good way to look at it.
Yeah. And if your score is your story, we can give you the path forward to change your story if you don't like it. Right. That's really our job, is to help you change that story. And I think in a lot of cases, it's easier than you'd think. Oftentimes there's just a couple low hanging fruit things that you could do to really drive it forward. So there you go.
Thank you.